Back to Cheddar Business. Weekly U.S. jobless claims rising by a whopping 70,000 claims to 281,000. The consensus estimate was for only 220,000. Joining us now to discuss is Mattie Duppler, Senior Fellow at the National Taxpayers Union and President of Forward Strategies. Mattie, it's always great to have you on the show, and we appreciate you especially taking the time today. Give us your initial reaction to today's numbers and also clarify for our viewers what those take into account in terms of dates.
Right. So what we're looking at now is the first drip drop of data that takes into account the effects of the virus in the United States. Remember, every month we get those job numbers from BLS that says how many jobs were added in the course of the month. That has been an extraordinary bright spot in the expansion. We don't get those though until the first week of every month. What we see now every week are people who are filing for unemployment in the state. So we did expect those numbers to tick up. Those going up by 70,000 jobs is a huge jump. That is bigger than any jump we saw during the Great Recession. So we are curious now what we'll see in the coming weeks. This is data that is taking into account last week's unemployment filing claims. So that means that this week, when we're starting to see even more layoffs, we may see an even bigger number as that data continues to roll in over the course of the month.
I think it's fair to say we're guaranteed to see a bigger number next week, Mattie. But how big is it going to get?
It's hard to say. With the bill that passed the Senate yesterday and now is headed to President Trump's desk for signature, that expanded slightly unemployment benefits. That means more people can qualify, particularly as the effects of the virus continue to be felt even more profoundly throughout the country. And that is one of the demands that Democrats are making as the negotiations continue for a phase 3, continuing to expand those unemployment insurance benefits so that more people can qualify as they are either laid off or their hours are cut. Now, I think that as we move forward, we need to see more of a response from Congress and the president that really helps employers hold on to those workers. That's the only way that we can keep those unemployment claims from continuing to rise to catastrophic levels. We need to really harness the robust nature of the employment picture, which was, once again, one of those bright spots headed into the challenges of this pandemic was the employment picture. The labor market was very strong. So if we can provide backing and liquidity to businesses so they can hold on to those workers, that will provide a lot more certainty for workers as we weather this storm, but also create a much more robust environment so that when the virus challenge itself is over, we'll be able to recover much more quickly.
Okay, so give us some details on what you would prescribe to members of Congress right now. What does that actually need to look like? What do lawmakers need to do in order to blunt the effects of this?
Okay, well, I would argue it's an argument here. It's not a but, it's not an or. It's that we need to have a comprehensive approach to the effects of this virus. I want to make a distinction here. There's been a lot of discussion about 2008 and what's happening this year. These are extremely different circumstances. In 2008, we saw the crumbling of financial institutions, and our infrastructure wasn't able to withstand the deterioration of the economic environment. Here, we have a demand side shock. What that means is that the government has essentially told people they can't participate in the economy. Consumers have dried up, and these businesses, through no fault of their own, are left looking for ways to make themselves whole for the coming months. So there is a role for federal intervention here. There is a role for the states to be working with the federal government. What I want to see first and foremost is a federal response to the employment picture. As I mentioned before, having liquidity for businesses. That can come in many forms. That can come in the form of loan guarantees. That can come in the form of new loans being made by the Small Business Administration. But also, remember, we're right in the throes of tax season right now. Releasing a lot of businesses and individuals from those liabilities that they would have during tax season could also create a lot of new liquidity that individuals weren't counting on. That also would have less administrative lag on it from the government. So I'm talking about delaying the filing deadline and the payment deadline for taxes. Treasury did announce that they'd be delaying payments, but they did not delay the payment deadline. That means individuals still need to file their taxes or file for an extension in order to qualify, which creates just a huge, massive confusion. Congress needs to step in and delay that deadline further so individuals don't have to file their taxes, but they should do so for about 6 months or so we have enough room here for individuals to know what their circumstances are until we know we're going to improve.
Mattie, I'm probably not just speaking for myself when I say this has probably been the longest week of my life. We do know and are optimistic about light being at the end of this tunnel. We will get through this. I'm wondering, from your position, do you anticipate that when we do get past this, there will be major permanent reforms made to the way that workers are treated in this country?
I certainly hope that this gives us an opportunity to have a real conversation about the way the workforce is treated by their employers. And that's not to say that there needs to be whole-scale reform. I think there needs to be recognition that our public policy has not kept up with the way the workforce has evolved. I mean, look at people like us, right? Like, we're doing our jobs from our homes with a seamless transition. That's not true for the entire economy, but we need public policy that works for both class of workers. And that means creating an environment in which people, if they're experiencing a crisis like this, like a pandemic, they can take paid leave. But also, we need businesses to have the proper amounts of liquidity in place so that they can weather those kinds of downturns, even if they are unexpected and even if they are catastrophic to the extent that we're seeing right now. There needs to be an opportunity for those businesses to really be able to access capital that they might not have access to right now, simply because the consumer base has dried up. So I think that there's both an employer and an employee side conversation we should be having here. Certainly the fact that we've seen some paid leave provisions put into law right now, I think is progress moving forward. But that could certainly have dividends if we have a long-term conversation about how our public policy can change to accommodate workers in the future, not just in terms of downturns, but when we have expansionary times as well. We need to be prepared.
Mattie, Steve Mnuchin, Treasury Secretary, 2 days ago, reports indicating that he warned that unemployment could reach as high as 20% if the federal government doesn't act quickly enough. How high do you think unemployment will get?
Right. So the secretary did clarify those comments. He was doing a little bit of back of the envelope math there. I think unemployment has been let me take a step back. A couple years ago, the Federal Reserve thought the lowest unemployment we'd get would be 4.7% this year. We were at 3.5% headed into this crisis. So obviously there is a ton of room in this labor market. And I will return to the earlier point that what matters most right now is preserving what was very strong in this economy, which was the employment picture, to the extent that you can, so that it can bounce back, so that even if we do see high numbers of unemployment, they are temporary and they are a reflection of the circumstances as we're experiencing them. They're not an indication of decay in employment, because I do think that we do have a lot of space to run as soon as we weather the storm on this virus and we have public policy in place that can allow for us to really get businesses and workers back on their feet. We'll be able to bounce back pretty quickly, but that really depends on a strong, targeted, and quick response from the federal government.
Mattie Duppler, Senior Fellow at the National Taxpayers Union, also President of Forward Strategies. Mattie, it's always great to see you. Stay safe, stay healthy.
Good to see you. Stay healthy.
Thanks.